Ladies and gentlemen, welcome. I have the pleasure of welcoming you at the presentation of the Q1 2016 results of the Grupa Azoty Group, which will be discussed in more detail by Mr. Andrzej Skolmowski, Vice President of the Management Board of Grupa Azoty, Mrs. Anna Zarzecka-Rzepecka, Vice President of the Management Board of Grupa Azoty Zakłady Chemiczne Police, and Mrs. Anna Gol, CFO of Grupa Azoty Zakłady Azotowe Puławy. Ladies and gentlemen, welcome. Today we have at least two firsts. For the first time, we are presenting our results in a group like this. Joining me on my right-hand side is our new colleague, Mrs. Anna Zarzecka-Rzepecka, who is responsible for financial affairs at Police, and Mrs. Anna Gol, CFO of Grupa Azoty Puławy. So this is the first. And secondly, for the first time ever, we have been presenting the results of below what everybody has expected so far as far as our performance for the first quarter. So a lot of you, this has been a joke between us, a lot of you were very nervous of how to win this competition between you and us. But for the first time ever, we have won, and we are above the line in terms of your expectations. And a more detailed analysis of this performance will show, even though this analysis has taken place in the morning, so it was not a very long time to analyze our results, but even a very or more or less detailed analysis of our performance will show that we are well below above the expectations. Objectively speaking, some of our expectations were too high in certain areas. So we do have a potential to meet your expectations. However, we also need to react flexibly to our market conditions and the overall business environment. So moving on to our published results, I would like to draw your attention to two aspects. Primarily, the contract signed back in April. I'm talking about the contract with PGNiG. The contract was signed back in April. However, the contract was a final result or outcome of many months of negotiations with PGNiG, and the peak of that work fell on the first quarter of 2016. The gas contract with PGNiG, introducing gas prices linked to market indices, is an end or marks an end to a tariff era in our business. And this is a very important point. So instead of a funeral, we should actually have a celebration of the fact that the tariff is no longer applied across the group. We have also signed another contract with Agro CS for the supply and distribution of urea ammonium nitrate in the Czech Republic. And we also annexed other agreements and contracts concerning fertilizers, also outside of the European market and more specifically in the United States of America. However, the first quarter, irrespective of our contracts and the business area, the first quarter is also included major events in terms of our corporate structure, including both the composition of the entire capital group and also the composition of the management and supervisory boards across our subsidiaries, which also is reflected in the composition of the people presenting today's results joining me. As far as our specific results are concerned, you have already received the detailed presentation. I would like to now discuss the new management board in more detail. Mr. Mariusz Bober, you had the pleasure of meeting him for the first time in the last quarter. Mr. Mariusz Bober is president of the management board. Mr. Rojek joined the group as member of the management board. And Mr. Tomasz Hinz, who is responsible for procurement strategy and also raw materials and semi-finished goods integration. He serves at the board as the member. In the first quarter, we spent 249 million PLN for investments, including business development investments of 130 million, business maintenance investments at 77 million, mandatory investments at 29 million. In terms of the specific locations of our CapEx investments, we spent 50 million at Azoty Police, 61 million at Grupa Azoty Kędzierzyn, 27 million at Grupa Azoty Puławy, and 106 million at Grupa Azoty. Before we move on to discussing specific elements of our performance, let us discuss the structure of our sales. The share of the Polish market in the sales structure increased year on year by 5%, reaching 62%, which is directly related to a change in our sales structure in terms of the contribution of the fertilizer segment in Poland. In the European Union, this contribution is a little bit lower, down 2%, whereas the remaining markets remained largely flat, especially in South America, where the downward trend was more considerable. However, frankly speaking, the contribution of South America in our sales structure is very small, so it is enough for us to move the shipment of one portion of goods or other movements, and this share or this contribution goes down considerably. In terms of our business segments and the market overview for the segments, time and again, when we discussed our market outlook for 2016, I have mentioned that the price levels which we are applying across the group, especially in nitrogen fertilizers, are very high and have been very high. And considering that the entire fertilizer segment contributes a lot from reduced gas prices, then it turns out that the pressure from the market, both in terms of end users and the distribution business, will be increasing. We have also informed you time and again that both for the organization of fertilizer producers and also the associations of farmers across the European Union and in Poland have drawn the attention to the fact that the fertilizer segment must be more competitive in Europe, and the prices of fertilizers should be more and more comparable to the prices of fertilizers which are pumped into the European market from outside of the EU. Therefore, the price pressure has been increasing month by month. So those demands are justified in a way, because the entire agricultural segment is also looking closely at the fertilizer business, and everybody is noticing that European fertilizer producers have benefited a lot from decreasing or reduced gas prices. This was one of the reasons for the price pressures, and also in Poland we did not have winter in 2015. Therefore, agricultural work, seeding, and purchases took place earlier than usual. However, some purchases have been postponed in Q1 because we did have payment delays related to the distribution of payments from the European Union, from the EU subsidies. One additional reason was the prospects for the prices of agricultural products. And since those prices are not going up and there are no prospects for increasing those prices, therefore we cannot expect that the prices of fertilizers will go up either. Therefore, we have to focus on not only defending our price levels year on year, we have to defend ourselves from the downward trends. In terms of our product groups, nitrogen, fertilizers, and especially ammonia nitrate and calcium ammonia nitrate have gone down in terms of the pricing trends year on year, but also in terms of ammonia and urea, which we have pointed back in the Q4 of the last year as well, because the price downward trend was experienced in the Q4 for ammonia and urea. But if we compare the prices of compound fertilizers, it will turn out that even if the Q1 is not the high season for the sales of compound fertilizers, for NPK fertilizers, this will happen in Q2 only. However, also in Q1, we have experienced downward trends for compound fertilizers. As far as the prices of ammonia sulfate are concerned, they remained largely flat year on year, depending on the type, be it the standard ammonium sulfate or modified ammonium sulfate products. And if we compare those prices year on year, we need to emphasize that the oversupply of urea across the world, around the world, have put a lot of pressure on nitrogen fertilizer prices globally. In terms of plastics, the major factor which contributed to our performance in terms of the production of caprolactam and plastics is the continuing oversupply of plastics in the European market. This oversupply is a result of an imbalance of capacity and demand in China. The situation has been improving in China, and part of imported caprolactam has been sold. Still, at the macro level, from the Chinese market perspective, we can point to a considerable downward trend or weakening or slowing down growth in terms of Chinese economy, which is very important as well. However, we are also experiencing a growth in demand for engineering plastics, and there are also clear signs of recovery in the textile industry. However, the oversupply continues to affect the market and cause imbalance, which affects our spreads as well, which is also visible in our performance in terms of the prices. The pricing trends year on year are clear, a downward trend for caprolactam, as well as polyamide, even though there are also upward trends for the pricing of our plastics, especially for benzene and phenol. The Q1 is traditionally not very favorable in terms of our pricing trends for plastics, which have affected, to a certain extent, our performance in general. In terms of our chemicals and other business, we have experienced a downward trend in the prices of titanium white, which is directly related to a continuing oversupply of this product in the market. As a result, a lot of producers have decided to temporarily shut down their production units or have decided to go ahead with their repairs and maintenance activities, which will, in consequence, stabilize the market situation. Our colleagues representing this part of our business believe that Q2 will see a seasonal increase in the pricing trends, which will improve the situation across this segment. In terms of oxo alcohols, the pricing trends are directly related to a downward trend in the price of propylene. As far as melamine trends are concerned, the prices have gone up by 3%. And lastly, raw materials. A weak potassium chloride demand, downward trend in prices, as well as corrections of prices of phosphates, combined with a lower demand of compound fertilizers, higher sulfur stock, as well as lower compound and phosphorus fertilizers outputs, which have also affected our prices. As I have just mentioned, prior to the upcoming seasonal peak, which will happen in Q2, we have been experiencing lower pricing trends or downward pricing trends for our chemical products as well. The same applies to phenol, benzene, and propylene, which are directly related to the prices of oil-derived feedstocks. And we also need to emphasize a time-lagged correlation with oil price movements. I need to also mention lower gas and electricity prices, which is a positive factor, which allows us to stabilize or adjust our downward pricing trends. As far as coal pricing is concerned, it remains largely flat year on year. In terms of our specific performance, our sales is lower year on year. In 2015, in the first quarter, we reported 1.8 billion PLN compared with 2.8 billion PLN compared with 2.4 in Q1 this year. However, our EBITDA went up year on year, 517 million versus 485. So we have, as a result, reported a record-breaking EBITDA in the first quarter of 20.9%. The same applies to net profit and the net profit margin, which was at 307 million and respectively 12.4%. The remaining elements are rather stable, but we have to emphasize that the key drivers for EBITDA is the lower cost of sales. However, lower selling prices decreased our EBITDA, and the same applies to lower sales volumes. This was also related to the movement or the shift of sales from between the two adjacent quarters. In terms of our situation across the segment is concerned, we have reported lower sales, which were directly related to lower volumes and lower selling prices. So by value, our sales went down in the first quarter. However, our EBITDA was slightly better. This applied to agrofertilizers. Now, moving on to plastics, we have reported a lower performance in terms of both revenue and EBITDA. The same applies to chemicals in terms of revenue. However, EBITDA in our chemical business went up. As far as energy and other segments are concerned, they have remained largely flat on Q1 2015. In terms of the specific business segments, for agrofertilizers, we have reported a 12% downward trend in revenue, including 16% down on nitrogen fertilizers and ammonia production, and compound fertilizers down 5%. However, our EBITDA went up by 1%, and our EBITDA margin was at a record-breaking result at 24%. Considering the entire potential across the group, this is an absolute record-breaking level. In terms of our plastics segment, including caprolactam, we have reported a downward trend by 10% for polyamide and down 33% for caprolactam. Our EBITDA went down to minus 13 million. And as you can see on the graph, this results from the imbalance between the variability of prices of feedstocks and the selling prices of our products. In terms of chemicals, our segment revenue was down 12% to 535 million. The largest downward trend was reported for oxo products, for urea, and for titanium white. An upward trend was reported for melamine. EBITDA was going up by 61% and EBITDA margin as well. This segment, the chemical segment, reported a very good situation in terms of the financials. In terms of the entire group, our statement of financial position was very good. Our debt is below the line, is at minus 43. And our balance sheet total went up by 9%, reaching 11.14 million. Our cost went down, especially in terms of consumption of materials and energy, which resulted from lower prices of energy feedstocks, especially gas and coal, lower depreciation and amortization, which resulted from the write of impairment losses recognized on process plant in Tarnów, Chorzów, and Siarkopol. And on the other hand, our labor costs went up also as a result of an upward adjustment for the provisions for 2016 bonuses and salary rises. Now, moving on to discussing the situation at Grupa Azoty Puławy. Mrs. Anna Gol, CFO. The first quarter at Grupa Azoty Puławy was a very good time for us. Our performance is satisfactory and in line or even better than expected. Our revenue from sales was lower year on year. However, both EBITDA and net profit have remained largely flat, which results in higher margins, both for EBITDA margin and net profit margin. Our revenues from sale for Q1 stood at 152 million, and our net profit was at 161 million. The key contributors to our, or key drivers for our performance included the prices of feedstocks, which resulted in higher EBITDA year-on-year by more than 100 million. And this adjustment was corrected by the downward trends in volumes and prices of our products by 77 and 81 million, 61 million PLN. As a result, our EBITDA remained largely flat year-on-year at 227 million. By segment, both in terms of our agro and chemical products, we have experienced lower revenues from sale. However, considering that the cost of our production was also lower, our performance improved year-on-year. EBITDA in the agro segment was at 213 million, and the same ratio was at 42 in the chemicals segment. In terms of the contribution by segment, the contribution of the agro segment went up at the expense of the chemicals segment. In terms of our agro business, downward trends were reported both for nitrogen fertilizers and phosphate and compound fertilizers. In terms of the revenue, however, this was to a certain extent offset by an increase in revenue for other products and services, as well as merchandise and materials. Only for one product, we have reported higher revenue. In our chemicals business, an increase was reported for revenue in the area of melamine production. On the other hand, we have reported downward trends in revenue, both in terms of volumes and prices for caprolactam and urea. In both these segments, we have reported an increase in EBITDA year-on-year, and as a result, also in EBITDA margin. In agro, the EBITDA margin was more than 30% and more than 16% in our chemicals business. In terms of the statement of our financial position in the company and across our group, our situation is stable. We are on the safe side. Our balance sheet total went up by 10%, which was mainly due to an increase in cash and cash equivalents. Our financing structure remained largely flat. As a result, our profitability ratios went up, and in our opinion, our performance in terms of our financial position is stable. Our net debt is still on the negative side at minus 875 million. In terms of our cost groups, we have reported a general downward trend in costs by nature, which was mainly driven by lower prices of raw materials and also other costs, which was a result of a shift in time. However, we have experienced higher costs. We have reported higher costs of labor resulting from the recognition of provision for additional bonuses related to our performance. Thank you very much. And moving on to Police, Mrs. Anna Zarzycka-Rzepecka, Vice President of the Management Board. Ladies and gentlemen, Grupa Azoty Police reported the very same trends which have been discussed before by my colleagues. We have reported lower revenue year-on-year, and the reasons are clear. These include lower selling prices and lower volumes. I will discuss them in a moment. In terms of our profitability, those trends are quite the opposite. Our net profit compared to Q1 2015 went up by nearly 30%, and EBITDA went up by 12%. Net profit margin was at 9.9%, which was the highest result across all quarters, and our EBITDA margin was also higher year-on-year at 15.5%. By segment, obviously, the main contributor to our business, to our performance, is the fertilizers segment, and this segment reported the highest decrease in revenue and also the highest increase in EBITDA. In terms of our pigments business, we are reporting a downward trend in revenue and an upward trend for EBITDA. Other revenue remained flat year-on-year, and the same for EBITDA in our other business. The main drivers of our results are, first of all, decreasing prices of feedstocks, representing 53 million, which was mainly driven by lower prices of gas and ilmenite. Other, including movement in finished goods inventory, results from the fact that we are preparing our stock for sales. As far as the negative effects, we have experienced lower product prices and lower sales volumes, as well as slightly lower output and raw materials volumes. In terms of our fertilizers business, we are reporting a downward trend in revenue by 8%, including down 3% for compound fertilizers, down 13% for urea, and down 31% for ammonia. We are also reporting an upward trend for EBITDA by 13% and an upward trend for EBITDA margin up 23%. In terms of the volumes, in terms of compound fertilizers, urea, ammonia, and other, these are presented in the graph. In terms of pigments, titanium white volumes remained largely flat. However, our other products went down in terms of volume. So in terms of revenue, we are reporting a 7% downward trend. However, we are also reporting an upward trend for EBITDA, up to 42%. Our statement of financial position shows net debt on the positive side at 275 million. However, our total assets went up. The cost structure down 1.9%, which was driven especially by lower gas prices and especially natural gas prices, and also higher labor costs driven by pay rises. Thank you very much. We will also take this opportunity to talk about the key financials for Kędzierzyn. The revenue is at 441 million, down year-on-year. And the trends are the same as for our subsidiaries. The key drivers for this trend include lower prices of our products, especially for nitrate, and also lower revenue from the sales of oxo alcohols. However, we are also reporting a record-breaking level of EBITDA at 104 million PLN, or EBITDA margin at 23.6%, and the same for net profit at 66% and net profit margin at 15%. In terms of the performance by segment, lower revenue and lower EBITDA for our fertilizers business at Kędzierzyn. But we are also reporting an upward trend in EBITDA for OXO alcohol, up 14 million, and also a more or less the same performance in terms of our other business. The financial position at Kędzierzyn is stable. Our net debt is 2 million. Our total assets went up, which was driven mainly by an increase in cash and cash equivalents.